Ladies and gentlemen, it's time to sell everything. Get out of the market now. The famous Michael Burry, the man that called the housing crisis back in 2007, 2008, and made an absolute fortune, has now put massive bets against the S&P 500 and the QQQ. Welcome back to Strongman Personal Finance, everybody. We need to talk about Michael Burry and why I personally believe that following his example is one of the most clownish, ill-guided, misguided things that you could possibly do. Because following somebody that's rich and famous and got something right one time does not mean that you're going to make money. So what is all the drama about? Well, this man, Michael Burry on the left, and this guy on the right, Christian Bale, who played him in the movie The Big Short, is famous because he made a bet against the housing market back in the United States in 2006, 2007. And he made an absolute fortune when the whole economy imploded because of the housing crash. And ever since then, Mr. Michael Burry has been massively famous, and people follow his example. They want to know what he's doing. They want to copy what he's doing. If he does something, they get worried. Oh my God, the world's ending. Now, most recently, he filed a 13F, a 13 Foxtrot, as we say in the military, for his Scion or Scion or whatever you want to call it, Asset Management LLC. This is his hedge fund that he runs. And this lists all of his positions. Now, what do we see on the top here? We see two things. We see a put option against Spider S&P 500 ETF and a put option against Invesco QQQ. Now, these are U.S. stocks, bro. Invesco QQQ is more heavily weighted towards the big tech titans like Microsoft, Apple, Amazon, etc., etc. And the Spider S&P 500 is all the top 500 companies in the United States. Michael Burry has bought put options against these two, and these were owned by his asset management firm, his hedge fund, as of June 30th, 2023. Buying a put is a bearish action. You believe that the market, or whatever you're buying a put against, is going to drop, and you have the right, but not the obligation, to force somebody to buy these instruments from you at the exercise or the strike price of the put option. So everybody freaked out because 51% of the portfolio is in a Spider put, S&P 500 put, and 43% is an Invesco QQQ put. This is a massive bet against the U.S. stock market. And of course, the rest of his portfolio is just a smattering of random stocks that he sells in and out. Let me be very upfront with you. It is a big problem if you are trying to shape your investments based on what Michael Burry does. Check out the pinned comment below and join our Discord community where you can ask me questions directly via text. And if you sign up for the highest tier, you can actually meet me in person every 2 weeks. So check out the pinned comment. Join the Discord community, and let's make some money. Here is the problem, ladies and gentlemen. What date are these holdings? Well, these were his holdings as of June 30th, 2023. Let's zoom in for you little blindies. June 30th, 2023 is when this position was in place. His portfolio was this on June 30th, 2023. When was this form filed? August 14th, 2023. Wow, that's a month and a half after his position was where it was in this report. So this could be massively outdated. So if you wanted to follow Michael Burry, guess what? You've missed the boat by a long shot. Okay, he could have sold out of this position. The options could have expired. He could have lost everything on the put options. It could have been any number of things. Now, here's another thing I've noticed about Michael Burry. Yes, he called the housing crash, okay? I wasn't even watching the market back then. I was just some kid about to go into college, basically. But here's the thing I've noticed about his portfolio. he's in and out of stuff all the time. So as of June 30th, 2023, he had 33 holdings. We go down and we see, okay, he's got these 2 put options, which are the vast majority of the portfolio. And then he's got Expedia, Charter, Generac, Cigna. For whatever reason, he's invested in all these different stocks, okay? Let's go to the prior 13F filing. Oh, so 3 months later, he only has 21 holdings. JD and Alibaba, Signet, let's go back and see. Does he have JD or Alibaba in here? No. So he bought them, and then within a couple of months, he sold them. So he went from 33 holdings all the way down to 21 holdings. Okay, let's go to the 13F before that. 9 holdings. And before that, if we go to the other 13F, 6 holdings. So he went from 6 to 9 to 21 to 33 within the course of a year. This guy is a swing trading weirdo, okay? What are you doing, Michael Burry? Let's see the value of his portfolio. 1.7, 106, 46, and 41. Man, did he make a bunch of money there? Woo, baby. Maybe he did make some bank there. But do you see my point? You cannot follow this guy. By the time you get the 13F, it's too late. And he's not a long-term investor. He's swinging in and out of these positions. And by the time you see them, you're going to be selling your butt because he's probably already sold out of them. Actually, I'm guarantee you he's probably already closed out these positions, okay? So yes, he's famous, blah, 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 blah. Pick an index fund, buy it consistently, max your tax advantage accounts, and if you want to have fun, okay, put a couple percentage of your portfolio into Robinhood and do whatever you want to freaking do, okay? But do not follow this guy. It's a waste of your time to follow what he's doing. I love all of these YouTube channels freaking out. Oh my God, he did a trade against the stock market. Who cares? You should be thinking long term and not worrying about this garbage, okay? So that's my thoughts. Totally freaking useless and a waste of your time to even, for a second, look at this man's portfolio, okay? Have a wonderful day.